If you've ever registered a company in South Africa, you've probably received a bundle of documents from CIPC. Documents like Core 14.3, Core 15.1, and others that look like they belong in a law textbook. Most entrepreneurs either save them and never look again, or lose them completely and panic when asked for them. That panic starts when a bank, funder, supplier, or government department says, "Please send us your CIPC documents." Suddenly, boring paperwork becomes urgent and stressful. It's vital to understand what these documents are and why they matter. Your CIPC documents are not just registration papers. They are the identity documents of your company. Just like you need an ID, your company needs CIPC documents to open bank accounts, apply for funding, or register for VAT. Without them, your company cannot register on CSD, apply for tenders, or sign certain contracts. If those documents are missing, outdated, or incorrect, your business simply gets stuck. The most important document every business owner should know is the Core 14.3. This document confirms your company exists, including its name, registration number, and type. It also lists the names and ID numbers of directors. This is the document requested to prove registration. You'll need it for banking, SARS registration, VAT, CSD, tenders, and funding applications. If your company is active, it can always be re-downloaded from the CIPC system. Another key document is the COR 151A, also known as the Memorandum of Incorporation or MOI. In simple terms, this document is your company's rule book. It explains how directors are appointed or removed. It also details how decisions are made, how shares work, and the company's powers. Most small businesses use the standard MOI, so many entrepreneurs don't remember dealing with it. However, when adding shareholders, changing ownership, or bringing in investors, the MOI becomes crucial. Banks and investors often ask for it. Share certificates are another document many entrepreneurs overlook. They show who owns the company and in what percentage. Even if you're the only director and shareholder, your company should still issue a share certificate in your name. Share certificates become critical with multiple shareholders when selling part of the business or seeking funding. Many small businesses forget to issue them, leading to ownership disputes and delays later. One of the most important and ignored requirements today is the beneficial ownership declaration. CIPC now requires companies to declare who actually owns and controls the business. This information must be submitted every year and whenever ownership changes. Without a valid declaration, you cannot submit your annual return and your company becomes non-compliant. Banks may flag your profile and funding applications may be rejected. This requirement is mandatory. Each year, when you submit your CIPC annual return successfully, you receive a confirmation document, Core 30.1. This document proves your company is active and your annual returns are up to date. It's commonly requested during tender applications, funding applications, and compliance renewals. If your annual returns are overdue, you won't have this confirmation, which immediately raises red flags. Director information must always be accurate. CIPC requires proper supporting documents for changes. Incorrect updates lead to outdated records, rejected bank documents, delayed SARS registrations, and failed compliance checks. What's on the CIPC system must always reflect reality. Having correct CIPC documents doesn't just protect the business, it protects you personally as a director. Missing or incorrect documents can lead to personal liability, challenged contracts, and ownership disputes. Organized entrepreneurs don't wait for problems. They keep their documents clean and up to date. Common mistakes include losing Core 14.3, not issuing share certificates, ignoring beneficial ownership filings, and forgetting annual returns. Also, using outdated director details or assuming deregistration cancels SARS obligations are common errors. These mistakes are expensive, stressful, and completely avoidable. Staying organized doesn't require complicated systems. A simple approach works best. Create a digital compliance folder for your Core 14, 3, moi, share certificates, and beneficial ownership confirmations. Also include annual return confirmations. Store them all in one place. Review these documents at least once a year and update CIPC whenever changes happen. This single habit can save you years of stress. CIPC documents may look boring, but they are powerful. They determine if your business legally exists. They determine whether you can trade, access funding, and keep your bank account open. An organized entrepreneur doesn't ignore paperwork, they understand it. When your documents are in order, your business moves faster, smoother, and with confidence.